Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpar Research and Analysis, and this is Daily Analytical Report. So let me tell you what's going on the markets. We will analyze the situation from the technical and fundamental point of view. We do have some nice movements on the market, but obviously first let's start with macro calendar. And the main event for today is GDP from Australia, at least for the pair with Australian dollar and New Zealand dollar, because those currencies are highly correlated. There's a high correlation between them, so Australian dollar is losing value right now. New Zealand dollar, on the other hand, is going up. So today this correlation is a bit broken. Also, we are under the influence of the data from yesterday. We got weaker PMIs from US, and actually we got some negative downswings on the American stock exchange, which also influences the movements on all stock exchanges all over the world. Most recently, we got data from Switzerland, CPI, which came worse than expected, and surprisingly it also caused a movement on the Swiss franc. The value of Swiss franc is going down. Why I said surprisingly? Because usually the data from Switzerland is not affecting the markets much, but this time is different. We are still waiting for, in 6 hours we'll have an interest rate decision from Canada. So Canadian dollar will be influenced, and there's a nice situation on American dollar to Canadian dollar, which obviously trading this instrument before Bank of Canada decision statement is very risky, but sometimes fundamental analysis goes in line with technical analysis. So I'm wondering if it will happen also this way. Fundamentally, I would say that's it. Currently we do have a correction on stocks. We do have a negative movement on gold as well, but I will show you that on the charts. So let's go with the charts. First can be euro dollar, which is actually since the beginning of November is making higher highs and higher lows. As long as this movement continues, the sentiment is positive. We recently got a bounce here from the lower line of the flag. It was perceived as a false breakout, but now the price is advancing lower again, so situation is still open. Yesterday we did not have any strong view on euro dollar, so we don't have any strong view on euro dollar today as well. There are more instruments on the market with much better situation than euro dollar right now. But I started with this instrument because it's the most popular instrument. But we do have some nice movements on Australian dollar to Canadian dollar, which I like very much, especially that I do have a short position here on this instrument, and actually we just made new long-term lows. Here, yes, we're on the lowest levels since January. We made yearly lows. This is very significant situation. Why is that? Well, let's look on a weekly chart. We broke the long-term uptrend line here, the blue line. Also, the price broke the horizontal support here, bounced from the blue line, so we use that as a resistance, and we shouldn't be surprised that the price is aiming higher. Also, we use this orange area as a resistance, and this allowed to make new yearly lows on Australian dollar to Canadian dollar. So yesterday we had a positive movement here, which was caused by a hawkish Reserve Bank of Australia, but traders are very optimistic towards the Canadian dollar right now, ahead of the statement, ahead of the rate decision, and it can be seen. Canadian dollar most recently in last few days is like one of the strongest currencies in G10. Gold. I told you that gold, yesterday we were here, and gold had gold had a combination of three very strong supports. And I told you that usually the price goes to the direction with the least resistance. And here the price went the opposite. So they attacked those supports which were looking very, very strong. So we had this long-term uptrend line, red one, mid-term lower line of the symmetric triangle formation, and a horizontal support here on $1,267. And price broke all of those three supports with a strong directional movement, as you can see here. Actually, on an hourly chart, it took them like 2 hours. Here 16 for 5 o'clock, and we broke those levels. Currently we can see a small reversal, but we cannot say it's like a proper bullish reversal or a denial of this downswing. It's more of a correction of this downswing, and the price is telling us that we should see more decline here. So current scenario, unfortunately, because I'm positive towards gold in the long term, but it does not look good from the technical point of view, and unfortunately for the buyers, we should see a stronger downswing in the next few days. This negative sentiment towards gold is also is also caused by the dollar index. Dollar index was climbing higher since the beginning of September. Most recently, like the end of November, they broke the uptrend line, but that wasn't a disaster because the price was still locked in a flag formation, and a flag is a trend continuation pattern. So we had a bullish trend continuation pattern and a breakout of the upper line of the flag. Well, and before that the price defended 92.7 points, which was a strong support. And we made a double bottom formation here, then broke the upper line of the flag, which should trigger us a buy signal, but I would be careful with that. So no buy signal here yet, in my opinion. What I would do is I would wait for the breakout of the orange area, right? So far there is no buy signal here yet. Price closing above the orange area should trigger a buy signal on this instrument. Australian dollar to Japanese yen. That was a very interesting situation because yesterday it looked like we will have a denial of the sell signal, but that's why it is very wise and welcome to wait for the daily candlestick to close, because signals created on the daily charts are the most important, and those intraday movements sometimes are usually are less relevant. So price tried to come back above the horizontal resistance yesterday, but they failed, and that actually triggers a beautiful sell signal here. Let me tell you from the very beginning. So there was a downtrend, there was a correction wedge pattern. Those red lines is a wedge pattern, then breakout of the lower line of the wedge, then price comes back and tests recent support as a resistance, and this resistance is tested positively for sellers, because we do have two shooting stars. Maybe the first one is not the greatest one in the world, but the second one is very good, and shooting star itself, all right, but after that we do have a confirmation of that. So a very negative candlestick which confirms this bounce from this resistance and opens us away to new lows. And actually that's a great risk to reward ratio here, because it has like 130 pips stop loss and it has 340 pips take profit potential trade. That's the potential trade on Australian dollar to Japanese yen, and it looks very, very promising. Next one is American dollar to Danish crown. As you can see, the correction equality pattern is still there. This one is a bit bigger, but it's still a flag. Although the midterm downtrend line was broken, but it's still a flag. So still we should see a downswing here. WTI. Sideways trend, not very interesting situation. No proper trading signal here. The price is still respecting the uptrend line. The price is still above the horizontal support. Those trend lines, this black one and this blue one, are not the most important here. I think that the most important here is this gray support on $55.10 per barrel. And as long as we stay above the support, sentiment is positive. Euro to Japanese yen is heading lower after making a triple top formation here, and the gravity should act here, and we should see the 80 pips downswing. The price should decline more. The price should go lower, 80 pips lower to the green support. Cable, we cannot complain about the volatility here. As for today, 54 pips, and we are slowly getting to this ultimate support here, created by the lower line of the wedge, created by the long-term uptrend line, well, mid-term uptrend line, and a horizontal support on this orange area here. So the price getting to this, getting to this blue rectangle and creating a reversal pattern should be a nice signal to go long. American dollar to Singaporean dollar. Here I'm waiting for the breakout of the lower line of the flag formation. Here, breakout of the lower line of the flag formation should trigger us a sell signal, especially that we do have like a mid-term downtrend here. The price making lower lows and lower highs. As long as the price is making lower lows and lower highs, the sentiment is negative. We are in the trend continuation pattern, which promotes a further downswing. So here everything looks bearish. Australian dollar to American dollar. Here everything was great yesterday. After this hawkish statement, the price broke this resistance on 38.2. We had this inverse head and shoulder formation. So here everything was bullish. Maybe I will remove this correction quality pattern to make it better. I can remove this because there's 38.2. So what do we have here actually? This is a false breakout above the neckline, left shoulder head and the right shoulder neckline, and a false breakout above 38.2, which was respected here. And that is a sell signal, especially that instead of inverse head and shoulder formation, what we got, look at those blue lines, that's a flag. So a flag in the downtrend because price was still making lower lows and lower highs. And so flag in a downtrend promotes a further downswing. And here, like on gold, price is above important supports, above the long-term uptrend line and above the upper line, lower line of the flag. And the breakout of those two lines can trigger us a strong sell signal. Okay, New Zealand dollar to American dollar is doing a bit better. Here we still are playing this inverse head and shoulder formation. So we are aiming the neckline here. Well, in the same time, as you can see, it's a pennant or a symmetric triangle pattern. So you have to also remember about that. if you're not convinced about the positive sentiment on this instrument, if you're not convinced about the positive sentiment, maybe you can wait for the breakout of the lower line of this formation and the horizontal support marked with a yellow color. Either way, we can have a nice movement here. So breakout of the upper line should trigger us a buy signal and a nice upswing, and a breakout of the lower line can trigger us a strong sell signal. And American dollar to Canadian dollar, as you know, we are waiting for the statement and interest rate decision from Bank of Canada, which should bring us a huge volatility on this instrument. Before this is going to happen, well, always market is always expecting something, right? So traders are expecting a certain statement from the Bank of Canada, and it looks like they are expecting a dovish statement. So they are expecting that Canadian dollar will be a bit weaker. Why is that? Well, before, a few days ago, we had a massive downswing here, so Canadian dollar gaining strength. But yesterday, traders were buying Canadian dollar, and they tried to break the horizontal support here, but they failed, and the price drew a nice hammer candlestick with a long tail, and that's actually a denial. That's actually a false breakout below this horizontal support. And this false breakout should result with an upswing. But for an upswing, we need a dovish statement from the Canadian dollar. From the Bank of Canada. Here, you can see that the appetite for the Canadian dollar is quite high. That's Canadian dollar to Swiss franc. But again, this is not caused by the Canadian dollar itself, but by Swiss franc. This is the movement caused by Canadian dollar from yesterday, right? This reversal. And this movement is just selling Swiss franc thanks to the weaker CPI data. Anyway, it doesn't matter what caused this from the fundamental point of view, because that was predictable from the technical point of view. Technical analysis showed us this possibility of an upswing when we made a false breakout here. And when the price came back above the orange resistance, that opened us a way to a new local highs, and actually opened us a way to test the upper line of this flag. And current sentiment is positive, so we do have an upswing, we do have a flag which promotes the breakout of the upper line of this formation and a continuation of this movement. S&P 500, here we can see that this week is not very good, right? We had an well, not very good. On Monday we just made new all-time highs, so it's very it's very hard to admit that this week is bad if on Monday we made all-time highs, but at the same time we are declining sharply, especially at the end of the session. Drop. Today we also are in a negative territory, but for a proper trading signal we need to wait till the end of the session. And price closing below the green area will be the first signal for a bigger reversal on the American Stock Exchange. So daily close below the green area should lead us to the support on let's say 2,560 points. 2,560 points. 70 points lower to the long-term lower line of the channel up formation. Next one is DAX, which is defending on a long-term support. Price closing below the orange area will be a very negative factor for this instrument. Will be a negative factor for this instrument and can trigger as a midterm sell signal on the European index. As you can see, the support is not working from the beginning of October. It's much longer, since June. Where is the next potential support? If we'll have a breakout, well, definitely here, and let's say this uptrend line. Also, maybe we can make a highlight here from correction equality patterns here. So we have few potential supports where this eventual drop can stop. So far, so good for the buyers because they are defending the support with a nice hammer. So there's no reason to worry yet. American dollar to Japanese yen. I don't like this currency. I don't like this currency pair. Yeah, I know it's very popular, obviously, but it's not very technical, in my opinion. What we do have here is a downswing, then a correction shaped like a flag. Then we do have a breakout of the lower line of the flag, which actually triggers us a midterm sell signal on this instrument. But the proper trading signal, proper sell signal will be created once the price will break the blue line again. Once the price will break the blue line, we'll have a daily close below a blue area. We should get a strong sell signal here. And Bitcoin above $12,000 and not stopping. 10th of December, CBOE is starting Bitcoin trading. Institutional investors will be able to get on the market, short Bitcoin, for example. So we'll see if that will be a game changer, but before that, people are not worried. FTSE, I wanted to show you FTSE because we do have a beginning, and this symmetric triangle is here, this ascending triangle is here from April, but currently we can see properly it's an ascending triangle, so we do have an incline support and a horizontal resistance, and this setup promotes an upswing, but in case of a breakout of the lower line of the triangle, we should get a nice sell signal aiming the horizontal support here marked with blue color. So daily close below the black line opens us a nice, creates us a nice sell signal. American dollar to Swiss franc, that was a good setup. And we got small help from the inflation, weaker inflation from Switzerland. So that was a nice buy setup because the price here in the middle of October broke the long-term downtrend line, went higher, then created a correction, which was a flag, and flag was promoting a further upswing. And that's actually what happened. But first we bounced from this horizontal support here with marked with orange color. We also used the lower line of the flag for a bounce, and we also bounced from the trend line. So that was a combination of three important supports. We used that for a bounce, for a bullish upswing, and after that the price broke the upper line of the flag, which actually triggers a buy signal. But if you want a further confirmation, if you want a stronger confirmation, you can wait for the day, for the daily candlestick to close above 23.6. If you will see daily candlestick closing above 23.6, that will be a strong buy signal, which should get us to the parity 130 0.9 pips higher. That would be a legitimate buy signal. But after parity, we do have another resistance on 1.01, 220 pips. That's beautiful. Euro to British pound, what we're having here is a sideways trend, no trading signal, but support has been confirmed, resistance has been confirmed, so we are just waiting for a proper breakout. Once the breakout will happen, the proper trading signal will be created. And Euro to Swiss franc, as you can see, since we had nice movement since the April, but the volatility dropped, especially recently in October and November. We do have bounces from the resistance, from the supports, from the resistance. And here, for the proper trading signal, we should wait for the breakout of one of those lines. So also it's not a trading occasion for now, but it is worth to keep that on your list, keep that instrument on your list, and trade it in the nearest future when you're gonna see a breakout. Thank you very much for watching Daily Analytical Report. I hope you enjoyed that, and I hope I showed some nice trading setups. We do have few signals now. We do have few trading occasions for the nearest future. So I hope you will enjoy that. For more trading occasions, visit our Twitter account and our website alpari.news. Thanks very much and goodbye.